One thing many people get wrong in trading is overcomplicating or trying to figure out the markets. This is what causes many traders to end up actually failing. And so I want to show you and walk you through a style that I use that is very simple but effective every day trading the markets. So the biggest thing when it comes to trading is having a plan of what you're going to do every day. You don't want to just have patterns that you're looking for and trying to figure out what's going on in the market, because for example right here on this recording of my trades is the market is all over the place here, and you can see I have trend lines all over the place, and trying to figure out or somehow understand what the market is doing here isn't always worth it. Sometimes it's better to just wait things out until they get to either an area where you want to take a trade that you think is higher value, or just until it becomes clearer. And that is a big thing a lot of traders fail to do, is they try and take a trade, or they have a mentality of wanting to always be in the market. And it's okay to just sit things out and be patient waiting for a good setup. And so for me, what I like to do, and what we're looking at here is a 1 minute chart of the ES futures, and I find these very good to day trade because you can trade them with a small account. You don't need that much in your account to actually day trade on them. And so for me, what I do here is when I'm looking at the market, I come in and I predetermine levels that I want to take reversals off of, and that's all I focus on. And so I have just one strategy I consistently use and look for, and that allows me to not have to be always laser focused and trying to figure out where the best trade is at the current time. I can just sit on my phone, play a game while I wait for the market to get to a good spot to actually take a profitable trade from. And so you can see here, so this is just a recording of my trade, so I can walk you through essentially a trade in real time and kind of teach you about why I took it. And so here, we're up here at this blue box. And so that is essentially a resistance level that I've predetermined that I think the market's going to reverse off of. And so how I predetermine those is just looking at the market before it was open. And so here's a picture of this area. And so here's that market, that chop and that craziness. And then right to the left of the chart, I can just see that the market made a high here and then reverse. And so I think that is a good area to look for a potential reversal again. And so that's all I have that box drawn off of. And so you can see there's that box again. And so as the market gets up to this, I'm going to look for a reason to get short. And so first off, there is this uptrend line here. And so a big thing is I want that to break, because I don't want to, you can see this is a pretty bullish move here. It's very strong. And I don't want to get in that. I don't want to just short the market as soon as it hits this blue level. I need to see some kind of confirmation or signal that the market is going to go short. And so this allows me to stay away from when the market just decides to just blow right through this level, right? And so what I do is I wait for this trend line to break, and that's when I can get in when I see either some big red bar of rejection, the market does a double top. There's quite a few different micro patterns that you can get in on, but the biggest key here is having these predetermined levels that are essentially a high probability area that the market is going to reverse. And so that keeps you out of areas like this down here, where you could be betting that the market's going to go one way or the other, and it just goes up and down, back and forth on you, and you just end up losing your money, even though maybe you pick the right direction, just because the market's in the middle of the range and it's just chopping about. And so all we want to look for here is when the market shows some kind of reversal. And so I'll skip forward here a little bit. You can see it's starting to have some overlapping bars up here, which can show that it's losing momentum. You can see that compared to these green bars, there's just consistent bull green bars here, one after another. And now we have a bull bar into a doji and then another bull bar, but you can see they're overlapping. And so that definitely shows some lack of momentum here, and that momentum slowing down. And then as soon as we get another big bear bar here that breaks this channel, that's when I like to get in short. And because this move is so quick to go up, it's likely that the market can quickly reverse down as well. And so in situations like this can definitely be a harder situation to rapidly get into. But this is when you want to get in quickly, because when the market moves quickly in one direction, if it reverses, it generally moves down quickly as well. And here's another example of that right over here is the market moved up very quickly, and then it reversed that very quickly as well. And then you can see here, it reversed that pretty quickly as well. And then eventually it just went into chop, and that'll definitely happen. But a lot of the times the initial reversal can be very fast. And so that's what I'm kind of thinking here is, hey, the market moved up quickly. We're at a level that I think we have a high chance of reversing. And so I want to get in as soon as I see any kind of weakness, because I think there's a good chance we have a pullback here. And so all I'm targeting here is a 2 times my risk. You can see here, this is half the size of both of these. And so I don't have to be right every time on this trade. I just need to be right, 40% of the time, and you're profitable over the long run. And anything above that is great. And so with this, you can trade as big a size as you want. And so here I'm trading 4 contracts, which puts my risk on this trade to be about $150. And that is a really good starting point. And especially if you want to start smaller, you can start even smaller than that. And so I find the ES futures really good in terms of starting a small account and building from there, because you can take really small trades. And so just to point out here, it made actually a double top here. And so if you didn't get short in initially, I think this would be another really good short signal to get in on the market making this double top, because I think that's even more confirmation that the sellers are coming in and potentially going to push this lower. And so from there, I'll just zoom forward quickly here, and the market does start to sell off and give up that price. And that's kind of what I'm looking for here. And because this was an aggressive entry, I actually wanted to manage it kind of aggressively, because my thought process here is, okay, I think it's going to go up, and I think it's going to give it back quickly. And if it decides to not give it back quickly, then it's likely to go against me, and I want to get out at that point. And so you can see I moved my stop loss down above this little pullback we had, and then I actually moved my profit target down to 3 times my risk. And so that's kind of going for a little bit more with the idea that, hey, maybe the market's just going to go into this tight trend line down here. And if it does, I want to stick with it and let this thing go, because, at that point you could go down here or go down here and get 4 or 5 times your risk, and the trade becomes a home run at that point. And I think getting out, if it breaks above this little pullback right here, is a totally reasonable thing to do, because it's showing that, hey, it's losing that momentum, and it's likely to come back up and retest this high. And I just want to get out, and I'm okay losing some profit with the idea that, well, I still made money on the trade, guaranteed at this point, but I have that option or potential for it to go down even more and make a big win on it. What happened is it did end up breaking up higher, and I ended up just, making a small $100 on the trade, but that's still a great win off of that. And what we can do is, it doesn't mean we can't short up on this level again. And so what I did here was, my thoughts are, hey, maybe the market's coming up. We got the initial sell-off, and then the bulls are trying to keep the trend going again. And sometimes that is what happens. It'll come up, sell off a little bit, and then make essentially a retest of this area. And all this is it's the trend trying to continue, because right here we are, pretty sloppy, but it's in some kind of uptrend. And so all this could be is just a continuation of that uptrend. And so a lot of people betting that the market is going to continue in that, they're just going to come in here and keep buying. But my thought process, again, is I've already predetermined that these levels are a higher probability that the market is going to reverse at them. And so what I want to do is I want this to be potentially the initial lower high in a start of a downtrend. And so I'm going to look to short right here, betting that, hey, maybe the market's going to continue lower and we'll end up giving back this move up. And so my signal to get in here is, again, looking at, we have this little uptrend here. The market's kind of in a really tight channel. And so I want to see it break out of that first. And I want to get some kind of big rejection bar signal to get in. And so that's what we're looking for. All you have to do is we just sit here and wait for that to happen. That is totally how the market works. You got to just have your plan, sit and wait for it to happen. You don't want to be trying to read into every single move. And what you could do is some people will try and short up here, go long down here, go short up here again. And what that ends up doing is it just loses you money because you're essentially over trading. And so that's why it's really important to focus on a specific strategy. And so I'm just going to zoom here until the market actually does end up breaking, because it was in this for a while. This little move up here, I think, was 10 or 20 minutes, and you just have to sit and wait while that happens. And so here we have this big bearish bar breaking this really tight uptrend. And so that, for me, that is a signal that, hey, the market's come down, it's made this retest of these highs, and I think it's going to now flush lower. And so I'm going to get in here, betting that we're going to go down, go for, an initial 2 times my profit, put my stop up here at the highs, because I think the idea of this is still in play until it breaks up the highs, because it totally could come up here and chop around and sell off. And so here I'm putting in that order, and we're going to bet that the market is going to go lower, and then it's going to come back down here. This is 2x my risk. And if you think about it in terms of price action, because what we're doing is, you can see I don't have any indicators. We're solely reading the market in terms of what the price is doing. And generally, when you have a strong move up like this, when it does give it back, it generally gives it back down to here without too much resistance or support, because this is a very quick move. It didn't have any time to make any resistance or support. And so it's going to give this back up. And so generally down here is a good target if that's what I'm going for, or just my 2x. And so my 2x kind of gets right where this initially broke out. And so I think that's a great spot for me to get out of the trade and just take that easy money. Now, part of me was, hey, maybe I could go for 3x down here, and it totally might do that. But again, trading is all about going for the easy money. And the easy money is getting out before you get to some kind of resistance level. Yes, maybe there's more you could make on the trade, but generally that little extra bit is more difficult than it's worth. And so the market has a really nice initial sell-off, which gives you really good confidence that you were right on the trade. And then at that point, you just have to let things play out. And so here, why I didn't move my stop to here like I just did on this other trade is this was a little bit bigger of a signal, because this was a lot more of an initial start to a downtrend. I thought, hey, I just want to let this thing play out because I think that this is a good signal, versus this initial short right here. Hey, we could still be in an uptrend, and I don't want to, have it rip my head off by going all the way up. And so that's why I didn't end up moving my stop down here, because I wanted to let the larger signal play out and not potentially get chopped up by the market just doing its thing. And sometimes that's hard to deal with, because the market goes all over the place. But you just have to have your plan, have your trades, have your signals, and try not to mess with them too much once you have made that plan up, because once you try and change what you're doing in the market, it can overcomplicate things and cause you to make mistakes in the moment. And so this trade ends up working out really nicely. I'll just skip forwards here a little bit, and it actually does sell off even more. And again, that's okay. We don't need to capture everything that the market is doing. Again, we're just trying to go in and take some profits and get out, right? You can sit, I mean, this day I sat for what, 8:45, started at 6, almost 2.5 hours of just waiting. And that's perfectly okay, because when the signal comes and you're able to make a nice profit off of it, well, it doesn't matter, right? And so that's where having a simplified method is really important with the market, because you can really overcomplicate things. And if you were trying to figure out the market here in this really choppy, sloppy area it had, you would have ended up losing, more money. And once a good signal showed up, you would have made some money, but you would probably have been trying to make back the money you already lost. So let's walk through another day with some more really good examples of using this strategy. So just to show you that level here, here's the market currently, what we're looking at, and then just zooming back, looking at the market, you can see here is the market bottomed here again, and then there again. And so all I'm doing is just taking a box and drawing it in that level, because I like to use zones instead of just a specific price, because I think that the market is likely to bounce. If it's shown it's bounced in an area, I think that area is going to be a high probability that it's going to bounce again. And same with on the resistance side, if it's bounced up there, I think it's likely to bounce up there again. And so that's just how I draw those levels, looking for reversals. That's all I'm looking for pretty much every day. I'm not looking for all these crazy different patterns and trying to understand what the market is doing at all times. I'm just patiently waiting for the market to come and hit a level and give a reversal signal. And so on this day, we're hitting that level we just looked at, and we had a really strong sell-off initially. And so what I wanted to do is I wanted to be a little more patient and wait to see how it reacted to this level, because with this much momentum, sometimes the market can pull back and then keep puking lower. And so I wanted to see how this pullback and initial reattempt to go lower worked out. And so this is kind of like the reverse of that last trade we did, where it did that initial test of that zone we had, and then it came back up, did another retest, and then we took that second trade that sold off. And so this is essentially just that same thing of it coming back, giving this retest, and our hope is that it will go back up, and that is when we will get long, kind of up here. And so here we can see it's making what looks like could be a double bottom if it starts to push higher. And so what I want to do is I want to put in my order up here with the thought process of, if the market pushes higher, then I think that'll create a signal that it's put in this double bottom and then it's bounced here, and I want to be in the market at that point. And so you can see here I put in my order anticipating that, and I just let things play out, waiting for the market to end up doing that. And so actually, to let this run in real time, is I moved my order down briefly because the market made another bar. And so all I wanted to do is just put it above that previous bar and get in based on that. And so from there, all I did was put my stop below the low of the level that I had created, and then targeted my 2x risk reward. And also that kind of gets me out at this level up here. Now, this isn't a level that I've drawn up here, But you can see that the market did come up here and find some kind of resistance. And so based on what we were talking about in the last example too, is you can see the market sold off really quickly here. And so with that, if the market then does give that back up and moves up, I think it's going to move up relatively quickly because there wasn't really much backwards movement in this. When the market makes a quick move, if it gives it back, it's usually very quickly as well. And so that's where I think profit target up here is really good. And all our signal here is this is our double bottom off of our zone that we thought is a good support level. And so just to quickly kind of zoom through this I think did move up pretty quickly because, well, it moved down pretty quickly. And so that's just kind of how things play out in the market. And that's just something I've picked up over time from reading the markets. And that is one thing that experience really trumps everything in terms of just time in front of your screen. When you're trying to figure out trading, it really helps to just be watching the markets and practicing consistently, because you will start to pick things up like that. You will see, oh, the market, moves like this, and sometimes it'll give that back up because that's just what you've seen consistently. And so there, that trade filled up nicely and made some nice profit off of that without really having to do much. Now, trades definitely don't always fill very quickly like that. Sometimes it can slowly work its way up, go against you, and then go in your favor. But letting the plan and trade play out how you want is really important. And you can, if I just fast forward here, is the market ended up actually giving another signal to go long. And I thought it came back to the lows, had this little trend break, and then this signal's not as clear as maybe this one. I think the signal here is it trying to make some kind of flush lower, and then you get this really strong green bar. I think that's a pretty good signal to go higher. And it even this one right here, once it kind of gives that back up, in terms of, you can see we have this flush down, the market then flushes back up. You can see stuff's kind of going back and forth, and that's how the market works sometimes. Is it's not always going to be clean, but if it's in your trading plan to get in on certain signals, and for me the signal here is you're near your level, the downtrend is broken, and there's some kind of retest, then I think that's a good signal. And that's what happens in trading, is sometimes your emotions or your preconceived biases get in the way and you will not take a trade. And so I definitely struggle sometimes being trigger shy in terms of getting in when I see a signal. And I thought that was a good signal, and the market did end up breaking higher from there, and at least going back up to here, which would have been kind of where that easy money target would have been. And I don't remember what it did after that, but that is something that you have to be aware of when trading. Even though you have you can back test and understand and have a really good strategy that works, execution is still very hard to consistently do every day. And so that's something that you need to try and work on and be aware of when you are trading. And so that's all I have for today. Hopefully this was really helpful in showing you a simple strategy that I use. Now, of course, when you are trying something new in trading, always trade on a paper trader, because it can be really hard to try and learn this stuff. And when you make mistakes trading, you're going to end up most likely losing money. And I definitely don't want that to happen. I want you to, if you're really excited about doing this, definitely want you to be in this game a long time, because it is really fun and rewarding when you get the hang of it.